Welcome back to WithAlimov Trade. Gold prices slipped in Asian trading on Monday, extending last week's losses as easing U.S. China trade tensions reduced demand for safe haven assets. Spot gold fell by 1.3% to around $4,060 per ounce, while U.S. gold futures dropped 1.6% to about $4,072. The metal recently ended a 9-week winning streak after traders took profits from record highs above $4,300 per ounce, highs driven by geopolitical worries and expectations of monetary easing. The latest decline followed reports that U.S. and Chinese negotiators reached a preliminary trade framework during ASEAN meetings in Malaysia. This framework is expected to be finalized later this week, when Presidents Trump and Xi Jinping meet in South Korea to extend the trade truce and possibly lay the foundation for a broader agreement. U.S. Treasury official Scott Bessent said, quote, "The threat of a 100% tariff has gone away, as has the risk of China starting a global export control regime, suggesting the danger of renewed escalation has eased." These developments boosted appetite for risk assets, pulling investors slightly away from gold. Still, gold's downside was limited by expectations that the Federal Reserve will cut interest rates at its October 29th policy meeting. A weaker than expected U.S. consumer price report last week reinforced bets for a 25 basis point rate cut. Investors now look for clues about further easing through year-end. Meanwhile, other precious metals also dipped. Silver futures fell 1.4% to $47.91 per ounce, and platinum futures dropped 0.9% to $1,587. Copper stood out, jumping over 1% to hit a record high near $11,078 per ton, boosted by supply concerns and optimism about the U.S. China trade truce. Overall, traders are watching how the upcoming Fed decision and trade developments will shape gold's direction into November. Thanks for watching WithAlimov Trade. Don't forget to like, subscribe, and stay tuned for our next market update.